Good morning. This is the video for Friday, March the 13th. So as we normally do, we'll start off looking at FinViz. Volume, exceptionally high. Advancers over decliners by a ratio of 4-to-1. Now, the president took, what do you call it, a victory lap because the market went up. Biggest day up in the market in history, apparently. You know, I think that by Tuesday he's going to regret having said that. In fact, by Monday he's going to regret having said that, because the reality is this was just one of the swings that we're going to see in trading, and there's a lot more down days ahead. In fact, Monday probably. And there was a lot of buying going into the close, but there was some selling after hours, and I'm going to show you some examples of that. So the stock market breadth moved up, just part of this zigzag pattern. This is only giving us 1 year's worth of data. So we're going to keep looking at our data going back to 2007. We're going to introduce a new factor, which is called the Summation Index. I did that in the last video, and we'll talk a little bit more about it today. But you can see that Apple started selling off a little bit in the after hours. It closed at 278. And it moved down to 273, so that's a little bit of profit taking that you would expect with such a big up day. There's going to be opportunity to come back and buy Apple cheaper in the future for sure. Now the S&P, yes, up 230 points, up almost 10%, but it was really just a reversal of the day before. And look at this, it closed the gap. So if we take our gap drawing tool, I'm going to do this very quickly here. Motive Wave, by the way, Motive Wave has a sale, 25% off everything starting on the 17th. So if we look at our gap tool, and we say that the gap includes the tails, well, look at that. We closed the gap perfectly, and that's where we ended the day. So all that is a gap closure. And typically what we'll see at the top of the gap is resistance. And I'm betting money on it that we're going down on Monday. Apple up $25. It did the same. Well, its gap pretty much was closed if we follow the same use of tails and wicks. But look at that volume. All that volume is a reversal of the day before. We've had high trading volume for Apple, you know, ever since this drop, this volatility started. The key thing to remember is that there are people selling, but for every sale, there has to be a buyer. So somebody's panicking, somebody's taking advantage of that panic. And that's the liquidity in the markets. And a lot of that is the high volume traders who are providing the liquidity, but turning around and selling, buying, selling, buying, selling. So there's always going to be somebody there to take advantage of your panic. Where did we end the day with Apple? Look at this, right with the Chiku span hitting the top of the cloud. Another significant number. So we've got room for Apple to move up to the bottom of the cloud for resistance. We've got an opportunity up ahead where we can break through and go higher, but that would be sometime in mid-April. You know, the coronavirus changes all of that going forward. But let's keep an eye on the Chiku span at the top of the cloud. Now, I've always had these two stocks, three stocks on my panel, but I've never looked at the charts because the charts aren't that interesting. But these are preferred shares for real estate investment trust. They have a face value of $25. This AGCNN pays about a 7.1% dividend, but down at $20, it's paying a 9% dividend. This is going to pay its first dividend in April. It was 6.1%. I'm not sure that its new dividend is calculated yet because it hasn't actually paid out a dividend yet, but its dividend, it's not calculated, but it's going to be quite high. It's going to be in the neighborhood of 7.5% to 8%. And I added some more shares of AGNCP on Friday. This is a preferred share that will be redeemed. If they were to go broke, it would be redeemed ahead of the common stock, sort of like a bond. It can be defaulted, of course, but it'll be redeemed for $25, and you paid $17.76 for it on Friday. Caterpillar up 574, and look at that. All it did, like some of our other things, was close the gap. Do you see a trend here? AT&T up 270. All it did was close the gap. Whirlpool closed the gap, but ended up above the gap. Good stock, lots of buying, but not really optimistic on the days ahead. Now let's go ahead and let's look at some of the other charts that we started to watch. This is the data that I spent $40 for, and goes all the way back to 1980, but we're only looking at 2007 and 2020. So here's the 2007 crash that went into the summer of 2009 and then started to move up. You can see all of that McClellan oscillator weakness in here before we finally started to move up. But we still continued to have a lot of chop. And that's okay to have these kind of swings. You get used to them, but the market still continues to move up. This is just a repeat of what we saw on the other McClellan typical slide. Let's look at the summation index. Let's look at the raw data for the summation index. The summation index is simply the running sum of the McClellan oscillator. So even though the McClellan oscillator turned up on Friday, the summation index continued to go down because we're adding more negative numbers to other negative numbers. So it's going to take a while for the summation index to turn around. We're going to start having to see some McClellan oscillator days above zero. And since those are two moving averages, 15%, 10% trend and 5% trend in advancers and decliners, it's going to take us a while to see a change in the summation index, but that's continuing to get more negative. And look at where we had the summation index the last time we had a bit of a crash, which was late 2018. The summation index got all the way down to 2258. While we saw the McClellan oscillator bounce up, we saw the summation index continue to move down. And the summation index is used for long-term timing. The McClellan oscillator is used for short-term and medium-term timing. That's why we see this kind of whipsawing. Even though the market is going up, the McClellan oscillator is useful for us in the short term to mid-term, but when we're looking longer term, we should be looking at the summation index. The McClellan summation index can be calculated as the sum of the daily values of the McClellan oscillator. So we're going to start looking at this one again. Look at back in 2009. January of 2009, when the market was still, the Dow Jones was still moving down to its low point on March the 9th, the summation index started to turn positive before the market started to turn positive. So that will be the sign that we're looking for. Are there other examples? Right here, where we had this drop in the Dow Jones, and we saw the summation index turn up right about the same time as the Dow Jones turned around. Where's the other crash? Here, not crash, but here's the other pullback that we saw in the fall of 2018. And we saw the summation index starting to call that drop ahead of time with 3 lower highs. And then we saw it rapidly turn around on December the 31st. And it shot up, which was an indication that the market was going to move higher. We didn't have much warning on the summation index here. It dropped together with the market, so it didn't help us to identify it, but it's certainly going to help us to identify when we've hit the bottom and when it's going to be an opportunity to buy. So let's find when we get our first turn positive, and let's look for a couple of days. Turning positive means that the summation index just has smaller negative numbers. Remember, it's going to be negative for quite a while, but now we're at minus 1384. We still have a ways to go before we start seeing numbers that are smaller than this. So I'm hoping that that's helpful today.